Hello, folks, and welcome to the Endgame Finance. If you're here, you're in the endgame. Today I'm going to talk about 5 different methods I use to evaluate a potential stock I want to buy. And these are not exclusive, there can be other methods, and I do employ other methods, but these are the 5 primary methods I actually use when I want to buy a stock or I want to buy maybe a fund that holds a bunch of stocks. I look at these 5 things primarily. So let's get into this. Number 1, who's buying this stock? Who else is in here? Is Warren Buffett in there? Is Jeff Bezos in there? Is Elon Musk loading up on the stock? Elon Musk has purchased a lot of OpenAI shares since the beginning, and that company has just released a chatbot, ChatGPT, which is basically an AI on steroids. It's a chatbot that can write your papers for you, it can talk to you, it can pretend to be a human person to such a level where it's indistinguishable from an actual person. So Elon Musk was early in on this. If you saw Elon Musk going early in on OpenAI, maybe there was something in there. So that's number 1. Who is in here? But this is not always necessarily the best methodology to use because, for example, Bill Gates has purchased a lot of VRM shares. Vroom is basically like Carvana in the sense that they sell volumes and volumes of used cars online, and also in the sense that they're most likely gonna go bankrupt. So if you follow Bill Gates into this investment, you will most likely lose all your money. So do not just take into consideration who is in there, but take that as a good indicator of potential future growth of the company. Like basically, great minds have assembled and they're going to do something big in this company. So that's number 1. Number 2, who is the founder? Who is the founder of this company? Is he still involved? Is his mission still being implemented? Or did he just cash out and sail into the sunset? This is very important because a company without a mission is a dog. It will go nowhere. It's just there to enrich the middle management and serves no other purpose. So who is the founder? Is this the founder's baby? Is this Tesla? Is this Elon Musk's baby? Is this Amazon? Is this Jeff Bezos' baby? Is this Microsoft? Is this Bill Gates' little child? Who is the founder? That is number 2. That's going to be very, very important. So number 2, who is the founder? What was the mission of the company? Is the founder still involved? Was this just a quick exit for them? Did they just want to cash out? Or is this their baby? Are they growing this with vitriol, with passion, with determination to build this into something huge? Do they have a vision for something huge? For example, Tesla's mission was to reduce reliance on oil. And basically oil and coal, because they are now also into energy storage. So they're trying their darnest to reduce human dependence on fossil fuels. And they're actually doing it by putting out over 1 million electric vehicles and millions more to come. In addition, they're also building a battery storage. So we don't have necessities to burn massive amounts of coal when there's a shortage of electricity, and this all reduces basically carbon in our atmosphere. So this is number 2. Is the founder still there, or has he just cashed out and sailed out into the sunset on his yacht and with his big paycheck? So if the founder is involved, how involved are they? If they actually left the company, try to see if the company is still trying to fulfill that vision of something grandiose, something that's worthwhile, something that's not just going to be discarded immediately. So that's number 2. Let's go to number 3. Does this business have increasing revenues? If you're not growing, you're dying. So if your revenues are not consistently growing at a 10 plus clip rate, you're not the company is struggling, let's be honest. They're not making enough money because this isn't even profitability. This is just revenues. How much cash can they bring in? Let's look at Tesla, for example, again. Tesla has grown consistently at 100% growth every year since inception. This company has been a behemoth. It's a monster. It's one of the fastest growing companies in the history of automakers for sure, but it's pretty high up there in the history of just growth companies. This company has overperformed. However, increasing revenues can still lead a company bankrupt. Much like Tesla, Carvana has also grown their revenues at 100% clip every single year. But Carvana is going to go bankrupt. There we go, number 4, profitability. Is this company just increasing revenues for the sake of growth, for the sake of attracting new investors? Or is this company increasing revenues so they can eventually become profitable and actually pay their investors dividend or pay their investors some money? Like Tesla. Tesla, for example, was not profitable for years and years. They just grew revenue at a higher and higher clip, and eventually they broke that point where they're actually just pulling in so much cash right now. It's unbelievable. The potential bankruptcy that was talked about since inception of Tesla is no longer on the table. This is a completely different company. So that's number 4, profitability. Profitability is also important because revenues have to translate into money that's going to fund your day-to-day operations. So, for example, if you can't pay your employees, they're not going to show up. They don't show up, business is done. If you can't pay your electricity bills, the machinery, the building will be shut down, and you will not be able to generate any revenue. So profitability is just as important as revenue. Profitability is number 4. But let's go to number 5. Number 5 is actually one of the most important aspects that I personally look at. Number 5 is, do you like the industry? Do you have that gut feeling in your stomach that everything is going to work out? Do you enjoy reading articles and watching videos, following tweets, and just being obsessed over this business? Because if you're not obsessed over the business, if you're not in love with the business, you really shouldn't be there. Because if you don't believe in the mission, if you don't believe in the statement of the company, you shouldn't be there, because you're going to forget about it. It's not going to be on your mind. You're not going to follow who's the CEO, who's the CFO. You're not going to listen to the conference calls. You might as well just give your money to a financial advisor and forget about it. Because if you don't love the industry, you have no business being there. If you don't have that gut feeling, and I want to talk about this a little bit more. Gut feeling is the most relevant aspect of investing. If you feel something is wrong with the company deep down, do not buy. If you just feel nauseated, if you feel that something doesn't add up, something just doesn't quite add up, you shouldn't be there. Do not buy that company, do not buy their stock. Simple as that. But this has to be your obsession. If you're not willing to obsess over investment, it's not an investment for you. So those are the 5 primary methods. Again, number 1, who else is in there? Number 2, who is the founder? Is he still involved? Is he still running operations? Is his vision being followed to a detail or followed to a level where the company will actually accomplish what it was set out to accomplish from its inception? Number 3, increasing revenues. Again, if the company is not growing, they're dying. If they don't have potential to capture more and more market that brings in more and more revenue, it basically means company is pretty close to just being on its last legs, or just serving the management that's draining the company of funds. Basically, management is just enriching themselves and they don't care about the investors. 4, profitability. Will the company be able to keep the lights on? Do they have enough cash to fund future operations? If not, they're most likely going bankrupt. Number 5, gut feeling, guys. Gut feeling. If you have that gut feeling and you're just in love with the company and it's all butterflies in the stomach, go for it. Take everything else into consideration, but go for it. If you feel something is off, if your gut tells you just don't do it, guys. But that's it. That's the 5 methods I like to look at when choosing a stock. These are not mutually exclusive. They're not the only considerations you should make when picking a stock. These are just rough guidelines that will point you towards a stock that could do well in the future. So that's pretty much it, guys. Let me know below in the comments section if you guys use any other methodologies, or if you guys have specific ways of picking stocks. And as always, like, subscribe, share, and remember, we're in the end game now.